Samir, do you see this as a risk? Because we saw about $3.5 billion go out very quickly from the Indian bond market, which put a lot of pressure on the rupee. This morning, it seems like a repeat of that is happening. The rupee has gone back to almost 60. But do you see this as a risk for the currency?
The thing is, see, if you're talking about today or tomorrow, there is no way I can say anything, because if anybody were to even sell today, he does not get yesterday's prices. You know, in many of these brokerage reports, you see that the day before, that is last night, they would put a sell on, say, government bonds, and they would have put yesterday night's rate and said, okay, we asked you to sell at this index, at this price, at this INR. The reality is that it has to be done today. So we are not talking about what happens between last night and say today evening, but I'm saying 1 week later, 2 weeks later, 1 month later, 2 months later. I'm not talking 3 or 5 year like the other many funds may do. I'm saying in general, the over hyperness about this activity, it's not activity, this event, particularly, see what is my frame of reference. My frame of reference is what I read from people who today have saying it was much harsher, it was earlier than expected, but read the second line, that what did they themselves expect yesterday. Therefore I say, I don't know, I have not spoken to any US strategist. You please talk to the next guy and say, what did you think would have been called dovish? And as of today, whatever I've read, 5-7 reports, they are all saying instead of September, it should have been December. So that is one. Second is that, you know, today the stock market has become like this Keen said, the economist, that when you are trying to, in a beauty contest, if you have to bet on the winner, you don't bet on the person you like. You bet on what you think that the judges will like, because they may have a different view of beauty. It's the same thing here. Today, it is no longer that anybody can justify fundamentally between yesterday and today what is the mega shift. Not between 1 month ago and today when he had not said anything. I'm not saying. I'm talking between yesterday and today what is the shift which justifies a complete reversal of anybody's thesis on emerging markets, on India, on current account deficit. So that is only because now we are in a room where somebody will panic. And in India's case, these fixed income guys will panic first because they are the last ones to enter. They have come in the last 6-9 months and they're going away. I've always said that please respect the FII equity guys, because they have been with India for 15 years. They don't normally panic except in 8. And unless you think it is 8, I don't think you're going to have massive outflows of FII money. And this is not 8 by any stretch of imagination.
As we speak, the market's down to the lowest point of the day, so 400 down on the Sensex, sub 5,700, an extremely weak market breadth across sectors, really, the weakness. And we're headed for a big day in terms of volumes as well, already done about 60,000 crores or so. Samir, are you worried, though, about the more lingering impact that could come through on individual stocks and their balance sheets, particularly those that have a large amount of dollar debt at this point? I mean, the quality of earnings may actually decelerate over the next couple of quarters with specific reference to this debt issue?
Absolutely. And you know, one reason why we feel more not optimistic, but less pessimistic is because we are long short, and we have many of these on the short side of our book, and we've done quite well on the short side. But this time I was not saying from that. I was saying separately from the long side that I don't feel so bad. But for me, because we have short many of these stocks, and we think that there are many things which this market has ignored. So it is not that only the global guys are ignoring. The Indian guys have also ignored every day many of these things. We have had outright scams in India, and people buy their QIPs because they come at 2% discount, and people think they will get now banking licenses. We have the same in our country, please. It's not that it's only the US strategists who are over hyper. We have the same. If anything moves, we rationalize its movement in either direction. But clearly India will be affected, and stocks will be affected, and we hope they are affected because some of them or many of them we have on the short side. No question about that. But separately, I was saying, independent of this, not to say that because I'm short I like it better. I was talking that even on the long side, I don't feel that this event per se is to be taken to this proportion that they have taken, because it was anticipated in its intensity, except a few months here or there in terms of its timing. Also separately, if you look at India announced as an example, last year that they will do tapering of their subsidies. In a sense, they did the same thing, that we will increase oil prices by 50 paisa per month, diesel prices, and nobody knew how to exactly analyze it. Now you do it in reverse, and you ask somebody that if 80 billion becomes 65 billion for 3 months, as what people are saying, the 15 billion for the world, how does it matter? Explain to me. Don't tell me technical, don't tell me herding effect, don't tell me piling on of trade. Tell me what a $15 billion reduction in government buying changes anybody in this world. It's the same thing. We could not all understand, as in the politicians, the opposition, the economists, the public, that 50 paisa hike in diesel, how does it matter, how does it matter, and they kept doing it, and it went through. In the same way, ask somebody to rationally explain how $15 billion reduction in 1 month will matter. It will not in the end. This is all because you and we are all, we have to do something. So we will also trade something, short something, buy something. There's no real effect in the end.
I don't trade, short, buy, but I do have to do something, Samir, on that. Yeah, you and I are the same. But so tell me, at this point, if the market sees some more downside, say 5 to 7% lower, you would go in and buy?
Actually, you know, I have been very desperate to buy nearly every day this time. It's just that, and I bought a little bit, but it's not a matter of 5%. It's just a matter of one day or 2 days of it, you know, sort of settling down. Now, if, you know, just now I saw in the futures that US is down 0.5%. We have seen that if the Asian market is down so much, at that point of time, for the US futures to be down 0.5% doesn't matter. But 1 or 2 days, if it stabilizes, whether India stabilizes or not, I will buy more. Yeah, I will either first reduce my shorts and then buy more. But right now, for whatever reason, I don't feel too bad in life, because I feel that some part of our problems are also cyclical. Not 100% is structural, that because the government did not take this decision, therefore nothing else can happen. Many things happen on their own with time, and some things they will do also. And don't buy the absolute, those sectors where absolute policy is required. But rest of it will move on. And we also know that other than 15, 20 stocks, 30 stocks, the rest are on average down 10-15%. You know, even HDFC, for example, the parent, is flat for like now 7 months. It grows its earnings 20% per annum, or 18. So it is already 9-10% cheaper than December. Plus, as a foreigner, you got another 8% because you can buy the same thing with the same rupees at a lower dollar. So there are so many stocks which wait another 2 months, but I don't think that it's as bad as it used to be for us in the past 1 or 2 years when these problems had just started. Now we are at the end of those, and the US being if the US economy, why are we forgetting that what Bernanke said is that the US is strong? That nobody is saying. They're only saying, oh, that means we are all admitting publicly that this financial market does not really care about any fundamentals of anything. It only cares about the cost of its own leverage. I don't think that is the way we should all be participants in this. We are all there, and I have enjoyed my 20 years and I will enjoy another 20, but I am not as proud of my community as I used to be many years ago.
Thanks, Samir, for joining in today with your views.